Okay, so I'm sure all of us are excited to hear our speaker tonight. So before we start, we'll introduce him. So our speaker, Brian, is an expert with financial technologies and investments. He started at Maersk as a graduate trainee, eventually gaining expertise in financial engineering. He is an influencer, industry trendsetter, fintech expert, and has appeared as a guest speaker and panelist in several events, including Bloomberg Philippines and TEDx Talk Philippines. So let us now give the time to our speaker, Mr. Brian Ngan.
Hi, everyone. It's a pleasure to be with you and to fellowship with you tonight. Let me share with you my screen. I just want to make sure everybody sees it. Okay, there you go. So our topic for tonight, I think, has been something that we've heard and we've referred to a lot in the last 2, 3 years, particularly last year in 2021. And that really is cryptocurrency and blockchain. So we've entitled this, talk as Crypto Made Clear. And the way we'll conduct, this session, I will spend the first 15 to 20 minutes to, run through my slides to talk about what crypto is, what it is in the greater landscape of investments, and what is the right lens that we should adopt when we deal with this kind of asset class. Because I think many people 10 years ago wouldn't have even heard of this term. But nowadays, if you scroll through your Facebook page, your Facebook groups, and even Viber, you will notice that a lot of people are talking about this topic, right? And I think the right lens to look at this is also to take a look at some learnings from history. What are some assets or some things in the past that have occurred that we can also see and take learnings from with what we're seeing in the current market in cryptocurrency and also in the broader market of stocks, bonds, and others. Okay. So the first area of our talk will focus first on cryptocurrency, what it is, and how do we understand it, in this context in the day and age that we live in. Okay. So I think the first word that needs to be associated with crypto and blockchain is the word disruption. And I think this is the perfect time to differentiate these two terms. What is cryptocurrency and what is blockchain technology? Because these two things, although related, are quite different. Okay. First and foremost, when we speak of cryptocurrency, what we are referring to are currencies or digital assets that are being verified using cryptography. Cryptography is a sophisticated mathematical way to verify certain transactions, certain entries, and to make sure that they are valid. Okay, just to put it in very layman's terms. And that verification mechanism is what blockchain is all about. Okay. So if blockchain is the enabling technology that makes cryptocurrency something that is viable today, without blockchain technology, which is the ledger and what we call a distributed ledger that is independently verified by multiple assets or multiple nodes in the system, that makes the ledger something that's immutable, means it cannot be falsified. And at the same time, it is distributed. What distributed means is there's no single point of failure. Like one of the fears that we have nowadays is all of our data, let's say if we have a Gmail account or you use Google services, they're all held in a single point of failure, which is Google itself. So what if the Google cloud server fails? Suddenly everybody cannot use Gmail, everybody cannot watch YouTube, everybody cannot access their files on the cloud. So what blockchain is essentially trying to do is to make it distributed so that there's no single point of failure. Okay. So the main takeaway really of blockchain and cryptocurrency is this is a big new technology that is becoming the underpinning of a new financial infrastructure. And I think it's better to understand this using the internet as an example. The internet 20 years ago is, still something that people don't really know much about. But fast forward today, it's very hard to imagine our lives without the internet. And the internet was the underpinning of a information infrastructure. Nowadays, we hardly read the news using broadsheets, the ones that come to our mailbox. Nowadays, we just read it through online. We take our news through Facebook. So that's what the internet disrupted. It was able to take information and make it readily available to everyone. So what cryptocurrency and blockchain is essentially disrupting is the financial infrastructure. And that's one of the key takeaways of what it's all about. Okay. And this is the next side. Okay. So what has blockchain and crypto enabled or led to? And I think these terms, some of you may have seen it online, and some of you may have also gone through it, by reading blogs or other information sources. So what it has enabled is these trends such as decentralized finance, NFTs, or digital assets that are placed on a blockchain, certain infrastructure, which are payment platforms that in the past needed to go through certain intermediaries or middlemen that nowadays you don't need anymore, and other new technologies or new business models. That's what we call frontier. Okay. And this is a little bit of a view of what the crypto ecosystem or landscape looks like right now. What we'll be more familiar with for the youth nowadays, especially in the Philippines, will be the one that is to your right most, the liquid tokens. That's where you see Ethereum, Polkadot, Bitcoin, Solana, or whatever. But there's also the other side, which is the left venture equity side, and early stage tokens in the middle, which are not yet that well known today. But if you fast forward 2, 3, 5 years from now, most likely will be household names in the future if their projects materialize and take place. Okay, so that's how broad the crypto landscape is. Just to give you an idea, when I was starting, my investigation and my exposure to cryptocurrencies, that was back in 2015, 2016. The only logos that we've seen that are in the leftmost side really were Ethereum and Cardano, Bitcoin, Bitcoin Cash. And then nowadays, from a few cryptocurrencies, it has already gone to around over 4,000 different tokens and different currencies that are available today. And that number continues to grow. But one of the things that we need to understand is a lot of these projects may not actually materialize and become fully usable in the future. And I will use a little bit of history to contextualize this. In the past, in the early days of the web, one of the trends was in the 90s. Anything that, they wanted an association to be in or to become, in a sense, in with the times was to just add a .com to anything. So that was the time where you heard companies like pets.com, and then you had companies like malls.net, so on and so forth. But the problem was, just including a .com into your company's name does not make a business viable because the business models may actually not work. So that's what we call, initial hype. And many a times, like in the early 90s, leading to the now called .com bust of 2000, 2001, there was also a bubble that, everything that was .com was being pushed to extremely high valuations. And then later on, the bubble burst. And so in 2001, many of these companies went really from 100 down to 0. And many of them closed shop. And one of the things you notice is that history may not repeat itself exactly, but it sure does rhyme. And I think, us now sitting in July 2022, this is extremely relevant because we've seen crypto go to extremely high levels in 2021. But from November 2021 all the way now, to July 2022, we've seen a crash of more than 60 to 70% of market value was wiped out. And to give some context, at the peak of the crypto boom last year, the total value of crypto reached 3 trillion US dollars, which is a big number. And then from 3 trillion US dollars, it has gone down by more than 60%. Now the total market cap is close to 1 trillion, around 900 something billion US dollars. So if you think about it, where did the 2 trillion out of the 3 trillion US dollar go? That's essentially the amount that was lost by the entire market during that time. So investors that came in during the bubble or during the peak have lost essentially 60 to 70% of the value if they held it until today. And that just tells you that, these asset classes, when they come in as new technology, although they may be game changers, it's important to see it in a broad context. That in the beginning, there's a lot of excitement, but not all the excitement materializes into a viable product. During the beginning of the web, there was a lot of excitement. The default search engine back in the day, if people remember, was really Alta Vista and Netscape. Yeah, but nowadays, fast forward, you don't even hear these names anymore. People use Google to do anything that's search. But during the big dot-com crash, people didn't even know that Google was going to be the winner, so to say, in the search engine space. And I think for this crypto uh, cycle that we're in, it's the same story that's repeating itself. It may not be the case that the dominant cryptocurrencies such as Bitcoin or Ethereum that we know today will become also your de facto currencies in the future. That's not a guarantee. And history, in a sense, this does not repeat itself exactly, but it sure does rhyme. And what you see in the slide down here are different asset classes. And funnily, even tulips were an asset class back then in Holland. And that was the biggest bubble that happened in the past. And I think, what we're seeing for Bitcoin and cryptocurrency is also rivaling tulip mania that happened 400 years ago. And this is an example, I think, that, we can draw from. And again, funnily, 400 years ago, something similar already happened in Holland when, the price of tulips, and the tulips are, a flower that's famous in Netherlands. And it went from 30 all the way to 200 during that time. And you can pretty much chart, this whole cycle of when the prices went from the 30 level all the way to 200 and kind of put them in certain buckets. And I want you to draw your attention to, the peak. What you see before the peak is two important words I want you to take away. It's normally greed and delusion. And that, I think, in the modern day terminology is what they call in the crypto word as HODL, HODL. When people say, hey, just buy Bitcoin and then hold on for dear life. That's what you hear a lot on the crypto language, when people talk online. But again, holding on for dear life, or, because they're thinking, Bitcoin will go to 120,000 to 200,000 or maybe to 500,000. That's often, driven by greed and delusion. And normally, greed and delusion is exactly what comes before the big drop, which you see on the right-hand side, which is where you see a fear, you see capitulation, and then eventually despair when people are sinasabi nila na ubus na sila, kumbaga. And actually, a lot of people in the last months have undergone this as well, right? And so what I want you to draw from is, take a look at this chart, try to remember the pattern. And then take a look at where Bitcoin was. This is the last 8 to 9 years of Bitcoin's chart, right? Do you see the trend? I mean, take a look at, again, I will switch to the previous slide. And then this is what Bitcoin looks like today. Okay, so cryptocurrency markets, even though flowers and digital currency may have very little in common, what is really the constant that you see across 400 years of history? The constant are the participants, humans, right? You and I. And we are always exposed to our normal human tendencies. And that's, the cycle of greed, the cycle of fear, cycle of hype, and then eventually despair, right? And you can see that that's what's going on right now in the broad market cycle of cryptocurrency. And again, when a new technology gets introduced, there normally is a huge hype that comes with it. That happened with the dot com. That happened 400 years ago with Tulip Mania. It's happening right now with cryptocurrency. So again, history may not repeat itself exactly, but it rhymes. And I think as Christians, as investors, it's very important for us to always put into context what we're seeing by drawing lessons from the past so that when we do our investments or we assess any investment, we will do it in a more intelligent fashion and also not just go with the crowd or go with the flow. Okay. So I think this is the key thing that you have to understand when it comes to cryptocurrency. It is a very risky asset class. All right. If I'm going to put it in a spectrum, which I will show later on, the cryptocurrencies and investing in them is in the most risky side of the spectrum. And I think many people have seen this themselves in the last few months. The first risk of cryptocurrency is really financial loss. They're extremely volatile. Historical drawdowns or down moves of more than 60% has happened. And particularly for Bitcoin, it has already happened at least 4 times in its history. Okay. And for any asset that has a huge potential for gain or for a return, it's also important for us to realize that there is also a huge downside potential or a huge risk that is involved. And what's important to realize is there's no such thing as an investment that will make you a millionaire overnight or in 1 week or in 1 month without the equivalent amount of risk that you're taking. So in other words, no risk, no reward, no cross, no crown, no pain, no gain, right? So be very careful. If you're looking at cryptocurrency, always understand that number one, it is extremely risky. And secondly, there's also a risk of theft and cybercrime. Many people, would tell you that crypto, oh, alam mo, extremely safe yan because nga there's blockchain technology, there are, sophisticated cryptographic math that guarantees that it is stable and cannot be hacked. But this is the second point that I want people to remember. Although the blockchain protocol is extremely secure, the exchanges that you're dealing with can be hacked. And this has happened a lot in the past, right? So in other words, the Bitcoin protocol itself or Ethereum may not be hackable, but the custodian or the exchange that you're dealing with in our modern case would be the equivalent is Binance, perhaps, or maybe PDAX for the Philippine side, coins.ph, or FTX, eToro, whatever platform you use to buy the cryptocurrency, they can be hacked. And if they're hacked and they lose the crypto, if you in place with them, then there is risk to your cryptocurrency. So although the protocol itself cannot be hacked, the custodians or the middlemen that enable you to participate could be hacked. And that's usually where a lot of cybercrime happens. And last but not the least is the third one. And this is actually the most important one, which is regulation. Why is this important? Cryptocurrency got a lot of popularity because it seems to be extremely easy for someone to participate. All you need to do is to take your phone, open an app, open an account, deposit money in, buy Bitcoin, buy an Ethereum, or buy whatever coin you want. Very easy. But one of the things that people fail to realize is it is not a regulated market. And why is regulation important? Regulation is important because if something goes wrong, within the transaction or during your experience of trading or participating, you have a person, an entity to go to call to file a complaint and to, in a sense, have your side of the story be heard and to make amends. In other words, let's say in the Philippines, let's say you deposit money in a bank. If the bank, for whatever reason, fails, everybody is guaranteed up to 500,000 pesos deposit insurance by the Philippine Deposit Insurance Commission, or the PDIC, because the banking system in the Philippines is regulated. And if the bank that you deal with loses your money, you're guaranteed up to 500,000 pesos. So there's no such thing that exists in the crypto landscape. In other words, it's the Wild West. If you lose your crypto because somehow you got tricked, you got scammed, or a certain exchange got hacked, there is no last resort. So what's lost is lost, and essentially you take responsibility for it as well. And another side of regulation that needs to be understood, and this is more relevant to what we're seeing today, is the fact that because there's been a lot of retail investors or individuals that lost money in crypto, particularly in the last 6 to 8 months, many of the countries are becoming more strict with regards to regulation in crypto. And one of the ways they're being strict is, number one, to do an outright ban. And that's what China did, in the last year. They banned cryptocurrencies from any Chinese national that wants to create an account cannot create an account if you're based in China. Another ban that was very recent is the Indian one. What they did was not an outright ban, but to impose a 30% tax on any crypto transaction. They call it a capital gains tax. So nowadays, if you make money in crypto, not only will your identity be known if you're an Indian national, but you're also required to pay 30% tax to the government. And by adding these layers, one of the thinking or the lines of thought is to protect the end user or the investor. But at the same time, by adding a lot of these barriers, it's also making it more discouraging, for people to participate in the crypto market. And when regulation comes in, like we've seen in the last months, that's also one of the reasons why the crypto market has been in a huge slump, because many people are exiting the market saying, oh, wow, there's a lot of regulation coming in. I don't think I want to be a part of that. It wasn't like it was back in the day, so to say, where, there was no regulatory body looking into it. So I think these are the three major risks that anybody needs to understand before even dabbling into cryptocurrency. So the basic caveat is, don't invest in something that you don't understand. It's very important to know the rules of the game before you embark on any investment. That's true for real estate, that's true for stocks, it's true for bonds, and it's also true for crypto. So moving on from the crypto asset class, there are different lines or different modes of investment as well, and I'd like just to briefly cover them, so that people understand that crypto's not the only way you can grow your money or place. In fact, I would tell and encourage other people, if you shouldn't open a cryptocurrency account or trade cryptocurrencies if you do not first have a stock account or an equities account. And if you shouldn't have a stock account if first you do not have a bank account or a deposit account. So in other words, there's levels to, in a sense, growth or exposure when it comes to taking risk. When you get a child, if they want to expose themselves, let's say, to a playground, you don't want them to swim right away on a 9-foot deep pool, right? You will let them start first on the wading pool where it's just half a foot, and then later on let them go to the 2 feet, and then when they have their right vest, the right training, maybe to deeper waters. So it's the same thing with cryptocurrencies. The sad thing is a lot of people want to jump into the 9-foot pool right away, and then they'll be surprised if they find themselves sinking, right? Because the way it should be done is, you start first on the beginning levels, have a deposit account, again, lower risk, but also low return, right? And then once you have a deposit account, you have your savings and emergency fund, then go up the ladder, deal with bonds, go with fixed income. These are asset classes where either the government guarantees and pays you a coupon. Those are your treasury bonds, or in the the Philippine context, your RTBs. And then there's also corporate bonds, that are being issued by companies of repute in the Philippines. And then after that, graduate to the next level. You can consider either real estate once you've got enough capital, or also go into equities and stocks. Again, why equities and stocks first before crypto? At least for equities and stocks, there are companies behind this. If I buy Jollibee stock, I know that there's a company behind with 4,000 branches of Jollibee, Greenwich, Chowking, Mang Inasal that's selling, that eventually makes money so that the stock price goes up or down. That eventually pays me dividends. So there's an underlying business that is attached to what I'm buying. And then only after that, once you have dealt with stocks and equities, then you deal with what we call alternative investments, which includes cryptocurrency. And I think, that's the right frame of mind to put, rather than going straight for the 9 foot deep pool and then suddenly finding yourself, in deep waters. Right. So there's levels to it. And I think the important part is, we need to invest in our own education to know what these investment assets or investment vehicles are, so that we can choose the right mix that fits our profile and also fits our needs for the future. And I think, this is an important slide as well. And the big takeaway here is you shouldn't put all your eggs in one basket, right? Because a lot of people in crypto, what they try to encourage people is to go all in, parang poker. Since I mean, oh, you take, your savings, ilagay mo sa isang coin, and then after that, that coin can actually eventually go up and make you a millionaire. But that's a very fool's errand, or a fool's proposition, so to say, because there's no such thing as something that will make you an overnight success, right? Imagine if you had put your money in, this cryptocurrency called Terra or Luna, and in May, just a few weeks ago, that cryptocurrency crashed by 99.9%. It went from 120 US dollars, and then 2 days later, it went to 2 cents, 0.02 from 120. So just imagine if you put your money there, and then 2 days later, suddenly it went from literally diamonds into dust, so to say, right? And then after that, how do you go back and, in a sense, tell your family or tell your loved ones what you had gone through? So it's important to have a diversified portfolio. Don't deal first with some things you don't understand. If you think that at this level, your knowledge or financial education is only until, let's say, knowing about deposit accounts, bonds, and stocks, then stick to that, right? If you want to know how to trade stocks and to, in a sense, be a day trader, then before you jump into it, you should get the skills associated that will make you successful there, right? Just like in any business. Like, if you tell me, Brian, hey, do you want to open a hotel tomorrow and then run it? I think for me, that's a gamble. Sugal yun. Bakit? Because I'm not a hotelier. My core competence is financial investments, right? So if I jump into a business that I have zero knowledge in, then that's sugal. And I think it's true as well for cryptocurrency. So if you get into cryptocurrency and you don't know anything about it, and you don't educate yourself enough to know both the reward and the risk, then it is also as good as sugal or gambling. Okay. And I think the way you minimize risk is, the right side of the chart, which is to diversify. That way you minimize your risk. If something goes down, the others, in a sense, becomes your salbabida that helps buoy your portfolio up so it doesn't go down to zero. So the gist really is you don't put all of your eggs in one basket. Remember to diversify. And so, this is my last slide, and then we'll focus on the Q&A, which I think is really the meat and potatoes of this talk. You can ask me any question regarding cryptocurrency or other asset classes. But the conclusion is clear. The first thing that you really need to do is to strive for continuous education. And you owe yourself that. Don't get into something that you don't fully understand. continuous education and learning is key. Okay. Once you get the right information, analyze it, and then determine if it's for you or is it something that you should pass. Not just anything na niyaya ka ng kaibigan mo means that you have to get into it, right? And a lot of people in the crypto investing side has actually gotten burned because of that mentality. Oh, buy this coin, buy that coin because sabi ng kaibigan ko, okay. But they didn't do their own homework, and then when they got burned, all you can say is, point to your kaibigan. But at the end of the day, you got burned, right? So take your education in your own hands, learn about it, and then decide if it's right for you. Number two, always weigh the risk and reward. And what you notice from my, previous slide, there's no such thing as high reward and low risk. That does not exist in any financial market. And many times when people approach me and then they say, hey, I heard there's a value proposition na if I get into this business, maglagay ako ng pera, I can make 30% per month guaranteed. Pag I hear that statement pa lang, 30% per month guaranteed, that should be raising a lot of alarm bells at the back of your head because there's no such thing as guaranteed, all right? So if you make and you get proposed something that's 30% per month, then the risk of that has to also be high. And most often, such kind of propositions end up becoming a scheme of some sort. Could be a pyramid scheme, could be a Ponzi scheme, could be whatever. And then essentially, yeah, you can get 30% upside, but your downside is actually to lose everything. It goes down to zero. So again, if you know the risk and you know the reward or the potential reward, the question is, will you embark on such an investment? Don't just be enamored by the potential reward. Always consider the other side of the coin. Okay. The third one, you should ask yourself, once you've done your education and your exposure and you ask your friends and get, in a sense, good quality information about any investment, then you should ask yourself, are you an investor or a trader? Okay. And the question really here is simple. Investors are people who put money in and hold on for a long term. Okay. Long term can be 5 years, 7 years, 10 years. Or are you a trader? A trader means you would just buy something and then when the price goes up, you sell it and pocket the gains. Know your investment horizon. Because a lot of people that lose money, not just in crypto, but even in trading stocks, bonds, or other assets, they mix the two. In the beginning, they say, "Oh, I'm a trader. I'm gonna buy Bitcoin at 60,000 because I think it's gonna go up to 120,000." And then when the price goes from 60,000 to 40,000, they've essentially lost 30%. They suddenly say, "No, I'm an investor now. I'm gonna hold on because I'm going to hold on for dear life because I think Bitcoin is the future. It's going to go to 120,000. And then $40,000 suddenly goes down to 30 and then eventually 20. So essentially, you've lost 60% of your money. And then they're going to say, oh my gosh, this hurts so much, Even being an investor, maybe, I should just let go and cut my losses, but already too late. It's already gone down too much. And then they go on and sell it. And since they sell it at an extremely low price. So again, people that switch their hats midway from a trader first and becomes an investor and then eventually says, hey, I'm a trader again when the market is good. Those are the people or the prototype of someone that loses a lot of money in any asset class, not just in crypto. So once you get your knowledge, always decide first, what are you going to do? Are you an investor or are you a trader? And if you're an investor, stick to the tactics of investing, go long term. If you're a trader, stick to the rules and the tactics of being a trader. Don't mix the two around. Okay. So that's my takeaway. So now we go on to Q&A. And I think, feel free to go open mic, ask any question. And I would love to, share insights, and whatever I don't know, I will also tell you that I do not know. Yeah, but for whatever, I can help and I can help clarify, would love to help and answer questions.
Okay. Thank you, Mr. Brian. So, as our speaker said, you're welcome to feel free to unmute yourself and ask questions. If you cannot unmute yourself, you can chat, and then if you're shy, you can privately chat either to me or to the YPro Tech account. So while you're still thinking about about your questions, I would just like to announce that you can also, for those young pro people, you can go to our Facebook page, the facebook.com/groups/ggcypro, and you can follow us so that you can get to know more about the other messages that we have. And also, you can also go to our Facebook page of Grace Gospel Church, facebook.com/ggc Manila. So you can, by joining that, you can also learn more about the what the Grace Gospel Church is. And for those who are who still don't have a church, you can also go to we have our on-site church service at Pina Avenue, and we also have an online church service starting at 9 a.m. You can go to our YouTube, just type in Grace Gospel Church, and you can see our YouTube channel. Okay, so so we have questions coming in. So one person asked, what does the fixed 21M coins of Bitcoin mean versus the rest of cryptocurrencies? Is that an important distinction?
Okay, yeah, love to answer that. I think Bitcoin, the 21 million that you mentioned in your question, that is the absolute number of Bitcoin supply that will ever be created. Okay, so the idea when they first created Bitcoin was to create an asset class that has fixed supply. So similar to the idea in the past that gold has fixed supply. So in the past, you pegged your dollar or your financial currency to the value of gold. But ever since, 60 over years ago, that has not been true anymore. In other words, the central bank in the US prints money that at will. They no longer need to hold the equivalent amount of gold in Fort Knox that has a correspondence to their currency. So when Bitcoin was made, the maker of Bitcoin, a guy called Satoshi Nakamoto, said that in by programming it into the protocol of Bitcoin, there will only be 21 million Bitcoins ever minted. But also remember that the minting of Bitcoin is not a straight line, not a linear process. Meaning, every year the amount of Bitcoin that gets minted or created becomes smaller and smaller as the years go by. In fact, by today, there's already almost 90% of the Bitcoin that will ever be minted has already been minted. We're already at the point where over 19 million to 20 million has already been reached. So the idea really is eventually there will be fixed supply, and then what they're trying to purport and what is the relevance of that to other cryptocurrencies is that they're saying if 21 million is going to be the absolute supply of Bitcoin, and the demand for Bitcoin is a lot of people that want to participate, then that essentially creates the price or the value of Bitcoin. That's the proposition that they were making for Satoshi's side. But other coins, as such as Ethereum, Solana, Cardano, these coins don't have a fixed supply, meaning the supply comes in as they are created by the node verifiers. And what happens essentially is if you have a coin that has unlimited supply, the potential for the price to go up is also more muted. And that's also the reason why among the coins Bitcoin has been the one that's been holding its value because of the perceived scarcity of that particular cryptocurrency. Okay. But with that said, it's also important to take note that you can actually own a fraction of a cryptocurrency. Okay. So it's not the case na, you own one Bitcoin and you cannot own half a Bitcoin. In fact, you can own 0.000001 of a Bitcoin, so to say. So even though there are 21 million coins ever created, that's fixed supply. You can divide the Bitcoin so to small slices, so to say, that there's a lot of Bitcoin still moving around in the ecosystem. So in a sense, it's not being traded as one Bitcoin and multiples of one. It's actually multiples of 0.601 of a Bitcoin typically, right? So that's the relevance of it. It's in a sense more scarce than other coins.
Okay, thank you. Another question is, what causes crypto crashes?
Okay, so and I think I covered that, during my presentation. And I think, the common thing between crypto, the dot-com bubble, which was a stock crash that happened in 2000, and also tulip mania that happened 400 years ago in Netherlands, is really people. What causes a crash? What causes a crash typically is, something gets bought up into the hype phase, and usually the hype phase, to put it very relatable way, how do I detect a hype phase for cryptocurrency? It's usually when someone who has nothing to do with cryptocurrency or financial markets calls me or approaches me and asks me, hey, do you know how to buy Bitcoin? And I got asked that question from a driver in our company. He went and approached me and said, "Sir, paano bumili ng Bitcoin?" Sabi ko, "Oh, that's not something the driver's job is to drive, not really to, focus on financial markets." But there must have been some friend of his or family member or someone in his circle that told him about it. And then the last person that needs to know is the one asking you. So I got asked also by, someone from like in the, let's say, a Sunday school friend of mine that asks me, hey, how do I buy Ethereum? I want to buy some. Normally, if the people have nothing to do with financial markets are the one that's eager to buy, that's normally a telltale sign that this whole thing is about to crash. And you know why? Because these things go up when there's a buyer or someone that wants to go in, that to take on that risk. So in other words, for me, if I buy Bitcoin at 20,000, my hope is that it goes to 40,000. But in order for me to make money, I need to sell that to the guy who wants to buy at 40,000. The guy that buys at 40,000 thinks it's going to go to 50,000, right? But for him to make money, there has to be someone out there to buys it at 50,000. So on and so forth until there's no last buyer, right? And if the last buyer does not exist anymore, suddenly the whole thing dumps and goes down because they suddenly say that, oh, nobody's willing to buy now at 70,000. And that's what happened to Bitcoin. It reached 64,000, 65,000, and then after that, it crashed pretty fast, right? And that's usually what causes crashes. If there's no buyer anymore on the other side, or not enough buyers that think that it's gonna go up, then in a sense, wala nang huling unggoy, and then the whole thing comes crashing down. And again, that's why history is important, because this is not unique to crypto. You might actually see some things like that in your lifetime, maybe 10 years from now, 15, 20 years from now. But you should remember the lessons from history. If people could speculate on the price of tulips, halaman, and drive it up 200 times, sometimes even higher than that. And they can do the same thing for stocks that happened in the web bubble. And now they're doing it for digital currencies. These things can come in other shapes or form, but as long as they're human participants, there will always be up cycles and there will always be crashes. And that's something that can be guaranteed as long as there are participants and as long as there are humans with greed, fear, and eventually this desperation as well, which we're seeing right now a lot in this market. So I hope that answers the question in a broad context.
Thank you. So next question is, with rising inflation and increasing interest rates, what investments should we go after? So this is more of a general investment question.
Good. Very good question. And also very relevant. And I think, I will link it also to crypto, right? One of the big differences with the crypto cycle today that was not true 2 years ago is the fact that cryptocurrency prices are extremely correlated now to other asset classes. Okay, but what I mean by that is this. In the past, you used to participate or buy some crypto in order to hedge against inflation. What does that mean? If you're hedging, it means that you're buying cryptocurrency so that when inflation comes, what happens? Usually real estate prices go down, usually stocks go down, right? And you have something that goes the opposite direction. That's called hedging. And that used to be true because at that time, cryptocurrency prices were not correlated with real estate prices or with stock prices. But today, that's the key big difference. You notice that the movement of cryptocurrencies, the last 6 to 8 months, directly mirrors the movement of stock prices and asset prices in the last 6 to 8 months. So it's no longer different. And if it's no longer different, it's very hard to argue that cryptocurrencies are a hedge against inflation. Okay, that's the first point. Again, so what the broader point is, okay, with inflation going up, which leads to equities going down, real estate also tends to go down, when interest rates go up. What should we do with our money, right? And I think, the important thing to realize is cash is always a position, right? I mean, also don't forget that cash is a position, right? Other people always think that they have to stay invested, but also remember that, holding cash is also a valid choice, right? And at the moment, the landscape looks extremely volatile. And sad to say, there are actually early cracks, or I would say medium-sized cracks already in the global system that is hinting towards a probable recession that comes in the next few months. And I think the smart thing to do is to, number one, have an emergency fund. Make sure you have a fund that's stashed that whatever happens health-wise or pag may pangangailangan, you can access. Okay. And then when it comes to investments, I would highly recommend really to hold on to cash at the moment and allow the asset prices to do a correction. Let it go down, let it capitulate, so to say, just like what you saw in the slide. It will go down and goes down hard. And after the capitulation, once there's a big sell down that happens, then you use your cash and that's when you go in and you deploy and you buy stocks, you buy, key assets at a fraction of the value that it was 2 years ago or a year ago. That's the way to do it in, this kind of markets. In other words, it's the right hat to wear is to be an investor, to look at a long-term horizon and to use a recession or a probable recession, because it's not yet there, but has a high likelihood of being, to go in, when things have already gone down a lot. And then you don't expect to, in a sense, make money right away. But in the longer run, cycles, again, the good thing is when it goes down, eventually it also recovers and goes back up. And then, once you're able to do, investing in a counter cyclical way, because again, it's so hard for you to buy things when, the recession is happening, because your tendencies, you're going to be really fearful. But, just like what Warren Buffett says, the secret really to investing is you have to be greedy when others are fearful and fearful when others are greedy. And that's very hard to do because it's very counter our human nature. But that's really the advice that I'd give as well. It's like, use the down cycle as a opportunity to buy. But in order for you to buy the down cycle, you have to have cash, right? So that's the advice I could give. Let the cycle run its course and then, deploy cash once things have gone down, and then just hold it on for the longer term.
Okay. Thank you for the answer. The next question is, since Bitcoins are not regulated, is there a way for us to guarantee that there would only be a finite number of Bitcoins?
Okay, good question. The thing with Bitcoin is, it's not regulated. And the thing that guarantees the finite number of Bitcoin is actually the crypto part of the cryptocurrency. Remember, if the Bitcoin is a cryptocurrency because there's a mathematical protocol that's written into it. Just think of it as para may self-driving mechanism siya. And that mathematical protocol cannot be changed. And so when Satoshi Nakamoto programmed it that Bitcoin can only be 21 million, it can only be 21 million, right? It cannot be changed by any central bank. So, the Banco Central or the Fed, the US central bank, cannot go in and say, hey, can we make it 42 million? Let's make it double, right? That can't happen because it's already programmed into the protocol, right? So that's the thing that guarantees the 21 million. But again, you should also understand not because something is scarce means that it is valuable, right? And that's a very important notion because porket scarce ang isang bagay, that doesn't mean that the value can go to the moon. That's what other people would like you to believe because many of them that hold Bitcoin would like to sell it to the next guy that is willing to buy it at a higher price. But that is not always true. Just because something is scarce doesn't mean that it has value, right? And that's what we're seeing right now. It has gone from 60 plus thousand down to 22,000 as of writing, right? So that's very important to note. But no, the central banks cannot change the absolute supply of Bitcoin.
Okay. Thank you again. So next question is, how can Bitcoin be used for money laundering? I think
Okay.
the questioner doesn't plan to, but then for curiosity.
Yes, this is for curiosity's sake. Okay, so we don't involve in such activities, but the reason why a lot of countries are also banning Bitcoin, and I'll give you the China example to be very concrete. If you're a Chinese citizen, there is something known as capital controls in China. You cannot move more than 50,000 US dollars if you're a Chinese citizen per annum. So if you're a Chinese citizen, you cannot take 50,000 US dollars and move it to offshore out of China. Every year, your quota is 50,000. But there's a lot of Chinese that want to do that. They want to move more than 50,000. Some of them want to move up perhaps 500,000 or a million. So during the early days of Bitcoin, that's essentially what they did. They said that if I cannot move 50,000 US dollars through the banking system, why don't I convert 50,000, like a 500,000, which is what I want to move, into Bitcoin, and then move that Bitcoin using, the protocol to a different country, and then convert that Bitcoin to US dollar, to Philippine peso, to Japanese yen, or whatever. So that's what was happening. It was becoming a back channel for a lot of Chinese to move money out of China to skirt their capital controls, which was placed by the government. So that's essentially money laundering already, at its very definition in a Chinese setting. And so that's how it's being used. But the response of the Chinese government was actually extremely harsh and extremely firm. What they did was to say anybody with a Chinese national ID cannot have a cryptocurrency account. And that's one of the reasons why Bitcoin and the greater cryptocurrency market fell last year, was because that was in effect by December 31, 2021. Right. So that moment, all of the exchanges, including Binance, Huobi, and OKEX, the three biggest exchanges in China, could not operate in China. Right. And so, yeah, so that's how the regulation, in a sense, responds also to money laundering using cryptocurrency.
Okay, yeah, thank you. Next question is, with the crypto crash recently, is it advisable now to go in and buy?
Okay. Very good question, right? And the answer really is again, you have to answer the question, do you know enough about cryptocurrency? And I suggest people to try to know more, learn. There's a lot of online resources. There's a lot of people you can ask, even, resources that are available. I would highly suggest this website, which is CoinDesk. You can type it in Google. That's a very reliable source for anything cryptocurrency if you're interested. Right. And my answer is you have to ask yourself, are you an investor or a trader? Okay. So first thing you ask is that, right? If you're a trader, then no, don't try to game the market if you don't know the rules of the game. If you're equipped to trade, then you could be exposed to it, try some, right? If you're an investor, then you have to ask the question first, are you diversified? Are you invested in bonds? Do you have stocks? Do you have deposit account? Check all that first, before you try to check the cryptocurrency box. But if all of your boxes are checked, and then what you have to ask yourself is, whatever I put in crypto, if I lose that amount, if it goes to zero, am I okay with it? Right? In other words, pag yan nag-zero, tapos bukas niyaya kitang kumain ng steak, yung steak will not taste any worse, or it will not taste any, alam mo yun, walang lasa kasi I lost so much money, kumbaga. In other words, don't put money in crypto that you're not willing to lose. Ang nilagay mo dyan, kapag nag-zero yan, kailangan buhay ang pamilya mo, makagising ka pa rin next morning, you can still smile, you can still go about your day without, being affected mentally or psychologically. Then go ahead, right? So that's my point. It's like, it's something that should be considered high risk, but again, there's potential for good return, but that potential is not guaranteed. Okay. And one of the things that I have just to caveat is the regulations are coming, and they're coming really hard. And that's actually one of the reasons why cryptocurrencies growth is becoming stunted in recent months. And that kind of environment was not true 4 years ago or 2 years ago. So, alam mo, there's always this idea na, hindi, akit yan ulit kasi tinan mo dati, umakyat naman eh. But, alam mo yun, that kind of narrative only works until it doesn't. Tapos pag hindi na nag-work, you're gonna be like, oops, right? So again, put money that you're willing to lose. And then after that, then, you just ride the game. If you make money, then fantastic. If you don't lose sleep over it.
Okay, yeah, thank you. Next question is, how do you think the push for digital currencies of governments like the US affect the cryptocurrency?
Okay. This is a very interesting question, right? Because actually, the invention of cryptocurrency, particularly Bitcoin, by Satoshi Nakamoto back in '09, it was first invented because, the guy who wrote the protocol was so frustrated with the global financial crisis. Ang sinabi niya noon was, how come the banks are able to print money, without any basis? There's no gold in Fort Knox. There's no, in a sense, hard asset that is correlated to the amount of money that's being printed by the Federal Reserve in the US. So why don't I create a currency that is backed by cryptographic proof that, is fixed in supply and can be, in a sense, traded or sent across the globe with not that much effort, and at the same time walang control ng central bank. And then boom, what became of Bitcoin, the first cryptocurrency na fixed supply. So, but the funny thing is, in the longer run, Bitcoin was started in 2009. Right now, we're sitting in 2012, 13 years later. It's actually the central banks that, was trying to be, in a sense, disrupted by the creator of Bitcoin. Essentially, sila yung gagamit ngayon nung technology ng blockchain in order to create what we call central bank digital currencies, or in short, CBDCs. Okay. And you're going to hear that term a lot moving forward because there are already countries that are about to do it. One of them being India, Singapore is also about to do it. Indonesia is also about to do it. So essentially, what does that mean? What it means is, they're taking the currency of the country. Let's just put it, let's say, in Philippine peso terms. And they're trying to place or to attach the currency used to a digital equivalent using blockchain. Okay, that's what it means. So that day, let's say when you take currency and then you pay, manong, let's say you pay 500 pesos for a lechon baka in Andox, right? If you pay that guy 500 pesos, the central bank doesn't really know that, Brian paid Mr. Andox 500 pesos. So if I give him cash, right? But nowadays, you send money through GCash using QR codes, sometimes using InstaPay or PesoNet or whatever switch. So that's already a level of nalalaman nung bank kung sino yung binayaran mo using how much money. To take that another layer further is to attach your currency to a blockchain protocol. So what that essentially does is that 100 peso or that currency, the central bank is now able to track exactly where it went throughout its history, right? So that 500 peso, let's say, was paid to me by my employer, and then eventually I used it to pay Lechon Baka, Mang Andox, and then Mang Andox used that 500 pesos to buy charcoal, and then let's say that charcoal vendor used it to buy something else. That entire history will get traced in the future using CBDCs or blockchain technology. So that's what's a glimpse to what will happen in the future. So that's the next level of currency where ngayon hindi mo pa na-trace pag cash. One level na natitrace is if you use e-money using digital currency, QR payments. The next level will be central bank digital currencies where they can trace exactly who pays what, right? And the pitch or the proposition is, oh, that's to prevent anti-money laundering, to prevent illicit activity, so on and so forth. So forth. But again, also there's a trade-off on privacy, right? Because in a sense, sometimes you also don't want to know exactly where that 500 pesos comes from or goes to. So there's always a trade-off there, but that's the direction where it's going. And that's going to be called CBDCs or central bank digital currency. So essentially, just think of it in one sentence. You take your currency and you put it in a blockchain. So that's what it is.
Yeah, thank you. Yeah, talking about the digital currencies. So another question asks, will this demonetize hard cash? So the follow-up question is, will governments be able to control digital currencies, which you have already answered. So will it demonetize?
Yeah, I think the demonetized part, I can answer that. I think no, it will not demonetize hard cash. But what you'll see is along the way, maybe initially 5% of our money supply is CBDC. Eventually, it becomes 20%. Eventually, it becomes 30% until it becomes everything, right? So it won't demonetize your hard cash, but along the way, you will see a transition towards it. So it's not going to be an adoption right away, but it's going to be a slow creep. Yeah, and then eventually, maybe your kids will not know that there's hard cash anymore in the past, right? So sometimes, change can go through in small steps, but eventually it gets there. And I think, that's the direction with CBDCs. In the beginning, it will be a small percentage, and then it will become more and more prevalent as we go.
Yeah, thank you. Next question is REIT a good investment compared to crypto?
Okay, so just to clarify, what is an REIT? A REIT is a real estate investment trust. Okay, so what it is essentially, just a broad example, is if a real estate company owns 5 malls and 2 offices, right? And then they suddenly decide that, hey, we want to raise some money. Why don't I take 3 of my 5 malls and 1 of my 2 offices, and then I create a REIT out of it? So essentially what they do is they go and package it, and then they go to the stock exchange, and now they have a REIT for whatever land company that is. And then what their promise is whatever cash flow those three malls and one office gets, the dividends I will pay out to those that own the REIT. Okay. So that's what a REIT is. It's essentially what you're owning is the cash flow that comes from hard property assets. Okay. So the characteristic of REITs is it's quite similar to a bond because it pays you a certain coupon or a certain return. But that return is based on what they get in terms of rental income from their malls, from their property assets, or from their office. Unlike a bond, the amount of return can be varied year by year. It can be more, it can be less, depending on the performance of those hard assets or real estate assets. But one of the things that is common with a bond is its response to increasing interest rates. Okay. Interest rates are headed up. And if interest rates go up, the value of a bond goes down. Okay. And that's also the same with REITs. If interest rates go up, the value of a REIT goes down, right? And why is that the case? It's because when the interest rate is high enough, people would rather buy the government bond and get guaranteed percent or guaranteed money instead of taking on the risk of, hey, maybe that property does well or that office makes money and then I'll make a dividend off of it, right? So the right way to analyze, is it better to buy REIT or crypto, is to relate it to the current environment. The environment is interest rates are going up. Okay. And when interest rates go up, REITs go down. And that's, I think, consistent with any REIT that you see in the market. And so the question then is crypto a better asset class to buy? Right. But the observation that we've seen is that crypto movement is now directly correlated with other assets. In other words, when interest rates go up, we've also noticed that crypto also goes down. So the direction is the same. It's no longer an inflation hedge. So my answer there is, you decide what you want to do, but it's no longer the case that, in a sense, crypto and inflation goes opposite directions, so to say. So if inflation goes up, crypto does not necessarily go up as well. That's the key difference in 2022. That wasn't the case back in the day, right? So invest with caution. And my suggestion is, it's a good time to be in cash. But if you're going to buy crypto or stocks or even REITs, there's still some ways to go in terms of it going down before deploying assets. Because one thing I can say is that interest rates are still headed up and the cycle is not done with regards to increasing interest rates.
Okay. Oops. Yeah, thank you. Next question is, can you make more money mining Bitcoin than trading Bitcoin?
Okay. Good question. That was true 3 years ago. Okay. But nowadays, not true anymore. It's not worth it to buy an expensive rig and spend money on high-end graphics cards to mine Bitcoin today. Because mining Bitcoin was attractive when the Bitcoin supply was not that high. But now that most of the Bitcoin that will ever be mined has already been mined, it is no longer that profitable to mine Bitcoin today. And the fact is, there are miners that still do it, but their yield is already very low. And that's also the reason why the prices of graphics cards, computer graphics cards, are going down, because the miners that used to buy these cards are also dumping their cards and their equipment to the market already. So it's no longer that profitable.
Okay, yeah. Thank you. Next question is, are there some major regulations that are highly probable to come from the Philippine government in the near future that would greatly affect the crypto traders here?
Yes, the thing is, the government is trying to emulate what the other neighbors have done, which is to tax Bitcoin and crypto gains. I think that is the most significant piece of regulation that can affect the local market. Yeah, and again, because once you introduce the tax, then you're also introducing the concept that your identity is going to be known, right? You can no longer, in a sense, trade cryptocurrency by masking your identity, just like the past. If once it's taxed, then everybody's accounts have to be linked to an ID. And once that is the case, then the attractiveness goes down because in the past it was zero tax, and then the tax now for, just to give you an idea, on equities or even income on bonds is 20%. So most likely, if they're going to impose a tax, it's going to be around that range. And the DOF has already signaled that that's something that they want to do.
Okay, yeah, thank you again. This next question, I think, is for those who don't know much about crypto. So, what does blockchain mean?
Okay, very simple. So blockchain is just think of it as a technology that enables you to verify or to skip a middleman. Okay, so think of it this way. Let's say for me, person A wants to buy a stock, right? I want to buy, let's say, a stock of a company. Let's call it Jollibee stock. Nowadays, I need to go through a broker, right? A middleman, right? The broker can be whatever, you can choose. There's a lot of brokers out there, online and offline. But in order for me to buy Jollibee stock, I have to go through the broker. But why is that the case? Because the broker is the one that validates that first, the buyer is real. The buyer has the money to buy the stock. And then second, the broker also guarantees that that stock is available for you to buy. Then you're able to execute the transaction, right? So what blockchain does is it eliminates the middleman. So blockchain technologies or enabled solutions, in the future, you don't need a broker anymore. So in order for you to buy, let's say, Jollibee stock, you can just go direct to, Jollibee and buy it, so to say. You don't need the exchange to be in the middle. So that's what blockchain is doing in a nutshell. And this can be applied to many different fields as well. I'm just giving the example for stock exchange. But it's also going to be true in the future if this is applied in our country or in other countries, that when you do, let's say, property registration, today you have to go through the RD, the Registry of Deeds, right, in order to validate a property transaction. If you employ blockchain into your system, you can essentially eliminate the Registry of Deeds from existing. You can transact between a buyer and a seller, and there will be trust into the system where the middleman does not need to exist anymore. And so that's, in a practical setting, what blockchain does, right? And if you want to know what the technology is about, you can search online and read about it. But what I'm giving to you is the solution, or what's the end game of why blockchain is being used. Yeah, but in short, it's a distributed ledger that allows you to do exactly what I said. By eliminating the middleman, you're able to do transactions between person A to person B, party A to party B, without having to pay the middleman costs. That's what it does in a nutshell.
Okay, yeah, thank you. So far there's no other questions. So since it's already 9:15, maybe we
Oh,
can
wow.
entertain one last question.
Sure.
First come, first ano na lang.
Hi, Sir Brian.
Hi.
Yeah, I'm just curious, no? What is your criteria when
Mm,
choosing what crypto to buy or
mm,
to invest on?
okay. My methodology is extremely fundamental research based. One of the things though that I recognize for cryptocurrency is it's a lot about speculation, to be frank. And the idea is there's no fundamental or fair value for any cryptocurrency. What I mean by that is, for a stock, I can actually take a look at the balance sheet and the forecasts, and then I can use some financial techniques to try to arrive at a value for a stock. Let's say Jollibee, let's say BDO, let's say SM. There's a methodology that you can use, typically what we call discounted cash flow, to arrive at a target price. You cannot do the same thing for cryptocurrency because there is no fundamental asset value for any cryptocurrency. Okay, that's the first thing that needs to be set. So if you don't have any fundamental value, you can remove that from the equation. Then, your basis would be to trade using technicals, right? Because the principle that I use is, take a look at fundamentals, take a look at technicals, and then, the market sentiment and environment, and then you manage your risk. But without fundamentals, essentially it's technicals that dominate the conversation or the decision making. And so I think actually cryptocurrency for technical based traders is an example of something that you can, in a sense, put the fundamentals down the drain and just use pure technicals to trade it, right? So to put it bluntly, if you're a technical trader, day trader, and you know how to read charts, and you also know how to, read volume and all the indicators, cryptocurrency is actually a nice place to do technical trading. But again, you have to have the tools or know the rules of the game. If you're trying to come into it not knowing all these things that I just said, then maybe it's not for you. But in terms of, picking projects for the long term, the way I would put it is, you would want to own certain coins or certain crypto assets that create network value. Okay. And that's a very, next level concept. And I don't expect most people in this room to understand what it means. But what that means is, the tokens that you own in crypto has to be something that is network value accretive, which means if more people use the network, the value of the token becomes higher because it's delivering, some sort of return or some sort of, I would say, incentive for the participants of that particular project, right? That's actually, sounds very broad, but if you're in the crypto investing space, you would understand what I'm trying to say. And only those kind of projects you would want to own over the long run. And then when I say long run, I really mean long run. It means that if the cycle goes up or down, you're still holding it. And there are funds that behave that way, and they've made, good returns out of cryptocurrency. But again, their holding horizon is extremely long, and we're talking 6, 8, 10 years kind of horizons. So in other words, for example, Bitcoin today is 22,000, right? It has crashed already from 65,000. But I know some funds that have been buying Bitcoin when it was 1,200 to 1,500, and they're still holding it until today. And their plan is to hold it even longer than now. They're not even selling at 65,000 when it happened in 2021. So if you're that kind of investor that's able to, weather the cycle and not, in a sense, be afraid of big drawdowns, then you look for projects that, are network value accretive. Then, you just hold it over the long term, right? But very few people will fit that criteria, I would say, because most people have a horizon that's much less than 8 to 10 years. Kaya that konti lang ang magfi-fit sa ganyang klaseng profile. But, in short, you have to do a lot of research, and honestly, the best research is not in Facebook. I can tell you already upfront. If you want to really be part of, like, the insider view of what it looks like in crypto, you have to take the effort of getting into a lot of Discord servers, even Telegram servers, Medium pages, and alam mo yun, you have to know the inside talk there. Then, you're able to, in a sense, get a early view of, the projects that could and I say could, no guarantees, do well in the future. But again, it requires a lot of effort, and it also requires a lot of downline research in order to get to that level. That's how I'd put it in a nutshell.
Thank you.
Okay. Yeah,
Ah,
yeah, thank you.
sorry.
So,
May I follow up?
sige.
Yes, you may follow up, of course,
Sorry,
of course.
sorry. Yeah. So given all these, no, given for example, the network use, network value, so would you say in the kahit in the medium term, is Bitcoin and Ethereum still the best project to invest on versus all the other altcoins that are popping up, to improve on the technology of Ethereum and Bitcoin?
Yeah, I would say Bitcoin is 1.0, first first cryptocurrency, but still very crude. Ethereum is 2.0. You have smart contracts that are built on top of it, but still problematic because the high gas fees, because of proof of work. But nowadays, with the transition to Ethereum 2.0 by September 13, it's gonna go towards a proof of stake model. But the problem is still the transaction speed. You can only do 7 confirmations per second compared to Visa and MasterCard that can do 40,000 confirmations per second. So it's still extremely slow. So I would reckon that, there would be another version, still be, a refinement on Ethereum or one of the altcoins that eventually takes its place that, solves the problem of high gas fees and also the transaction speed, the issue that needs to be resolved on the Ethereum side. So, very high probability that, your Ethereum is just, the Alta Vista or the Netscape and the early web days. And then the real Google of Web 3.0 or blockchain is still to come. That's my thinking. I think Bitcoin has its place as like the gold equivalent of the crypto investing space. And it's also created that kind of image for asset managers. But there's still going to be a future iteration of cryptocurrency because there are cracks on Ethereum's protocol that still need much improvement for it to become mainstream. Yeah, so that's the long and short of it. And there will be new applications, and I think we're still on that note, still in the very early side of this whole trend. So I would say, what you're seeing right now, if you're going to put it on a map, we're similar to 2001, in Web 2.0, so to say. And remember, Facebook was only created in 2007, right? So during the crash of 2000, 2001, ang nabuhay lang dun na companies that we still know that are big today are Amazon and Google, Microsoft as well. But the big game changers were Facebook that came much later. So I expect something the same as well for Web3. We know about Ethereum right now, and it seems to be the hot thing with NFTs and DeFi. But the next big thing could be around the corner. May not be the last one. Yeah.
Okay, yeah, thank you. So one last pahabol na question from the audience. So I think this is more connected to eschatology. So how does the blockchain technology connect with what the Bible is saying about one world government and currency?
I think the way I would put it is, it brings us closer to that eschatology or that point, right? Because one thing about eschatology is, if you go back a few years, there's always a new technology that we try to say, oh, baka malapit na yung end times kasi we're seeing these things happening. I think what we can say for sure is we're much closer now, right? I think with what we're seeing, it's much closer. It's very hard to say with definitiveness that malapit na yan, meaning 1 year from now, 2 years from now. That will be false because sabi rin sa Bible, nobody knows exactly what date, exactly what time. But I think, with all of these things that are happening and with blockchain technology coming in, one thing we can say is we're closer, right? So it's very important for us as Christians to always ask the question, are you ready? I think that's the more important part. We know that 10 times are close. We already see a lot of signs. Morality is also getting worse and worse globally, right? And I think we don't need to look at financial systems. You can just look at the other signs, and you know that it's coming closer. And the important thing for us to reflect on is, are we ready to meet our God? Are we ready to meet our Maker? And as Christians, our time is short as well to spread the word and to make His name known. And I think seeing these things as signs, clearly, the dati inisip mo parang how is it that people will not be able to buy and sell just by turning off a switch, diba? And things like that, you wonder how it's gonna happen. And now with all of these developments of CBDCs and blockchain and digital currencies, suddenly the answers to those questions become more and more clear, that it's actually possible to turn off a switch and exclude a certain person or a group from buying and selling, right? So that's what I can say. We're getting closer. I wouldn't say that we're there and that this is it. Yeah, because we don't know for sure. Only God knows. But the more important part is to ask ourselves, are we right with the Lord? Are we right spiritually with Him? And I think that's the more important thing, is that at the end of the day, learning about the end times is a very fascinating study in itself. But the more important thing is to spread His word, make His name known, because our time is short and we're getting closer to the end. And that should just give us more of a sense of urgency to do the mission and to fulfill the Great Commission and to make His name known.
Thank you.